Hello everyone, so today I have a different video than usual. I don't think I've covered anything on this particular topic on like paychecks in general, but this idea came about because we are ending the year of 2024 soon, and it's something to take in consideration for next year. And just like a huge disclaimer, this is mostly going to be for the US. If you are from outside of the US, I don't know how much of this is applicable. It may be applicable. I don't know how your tax structure works, or in general how it works for your paychecks and what is possible or what is not possible. This is specifically what I would recommend for the US. And even here in the US, these are just things that if you execute it correctly will do the correct thing. But I would always recommend you to talk to your CPA or your accountant on what exactly you can best do. These are just things that I know for sure you could do from your paycheck if you have these available. Actually the big inspiration of why I wanted to make this video is mostly because I have a sister-in-law who honestly has never had anyone teach this before. The other siblings have either had like friends or me, my husband in general had me to basically help him go through this, but my sister-in-law did not know a single thing about this or even know what there is to be, because like when she enrolled for her new job, she just basically did like, okay, I don't think I need anything, so I'm not going to do it. But she didn't realize that the other side of the story is taxes. So as you can tell from the title of this video, I wanted to focus more on what you can do to actually to have the most tax deductions or pay the less taxes legally from your paycheck. So there's going to be a few that if you were a little bit more financially advanced, or you know a little bit more and you're a little bit further into your career, you probably know most of these already. But if you're earlier in your career or you're even a college student, definitely stick around to watch this, because you may not even know about this if your parents didn't tell you. I did not know about this until I watched videos, or I had like mentors or friends that told me exactly what to do. And a lot of my mentors were at Accenture. Beyond that, not a lot of my friends beyond Accenture actually knew anything about it. So hopefully this helps. I know that a lot of times we have different priorities. So for example, if you wanted to pay student loans over anything else, I totally understand. I actually focused on that for a while before I did the 401k, but I will go into that a little bit more. So what I want to talk about is like, how can you maximize your tax deductions? And the big thing, and just to give you like a big concept here, to give you some structure here, I'm going to put it on the screen here. You have gross income. Gross income is actually how much you earned total before anything was taken out. And that's how much exactly you earned. You can easily calculate this usually by calculating your salary divided by however cycles you have per times 12. So in my case, it's 2 cycles a month. So that amount is basically my total salary divided by 24, because I have 2 cycles per month. So that is the gross income, period. However, what people don't realize, most people don't realize, is that you have all these taxes that you don't really actually have affecting you. But in this case, we have gross income and all the deductions and all of the taxes. So you have your federal taxes, you have your your federal income taxes, your state income taxes, and your city, if you have any applicable income taxes. And all of these are deducted from when you first did your I-9 forms when you got into the company. So those are actually, basically that's where you go like, oh, I want to have like 1 or 2 deductions or something like that. And what your main goal is to always owe 0. If this was your only job. You always want to owe 0. So you always want to make sure you don't owe the government anything. I know a lot of people are like, ooh, I want a nice paycheck at the end of the year, or at the end of the tax year. But you also have to realize like the goal is to actually lose and earn 0. So you want to always kind of hit on the target, like whatever you got taken out is all you really have. Most people don't really follow that. They either like want that end of the year check, but think about how much money you could have earned from that if you were to invest in it or save that. So the goal is to have 0 that you owe or 0 that is given to you, but most people don't really care about that. But what we want to do is focus on that chunk over here before it gets into gross income and go into net income, right? That little section there of like, what exactly is that juice? You want to increase the number of deductions that you have in between, and all the taxes are after that. So what you really want to do is, first, there's not much you can do about the taxes that are due However, what you can do is reduce your taxable income. 401k contribution limit, and that is right now $23,000. So what I actually have right now is I do have it maximized to $23,000. So I have all my paychecks I calculated the deduction that I will have $23,000 by the end of the year. However, this is the part that I didn't really know until later on when I came to Google, and someone on my team actually told me about this hack, and I'm like, I wish I did it in time. But this is the biggest reason why I made this video, is because it's something you need to do before the next year ends, because before the next year starts, because this is actually going to affect you right away. What I would do is actually put your entire bonus into your 401k. If you didn't know, your actual salary is going to be taxed less than a bonus. A bonus is considered supplemental income, so it's actually taxed way more. If you've looked at how much taxes are taken out, it's like almost 50% for me. So if you really wanted to do your basically save as much as you can on taxes, I would actually put your entire bonus towards your 401k. So let's say, for example, you have $10,000, put your entire bonus into your 401k, and then kind of backtrack how much you have to actually put in from your normal day salary into that, so you don't hit that 23,000. In this case, maybe like 1,000 or 1,100 per month. And then that is like what you could do instead, in addition to your bonus. So 1,100 you could put towards your 401k, and then you would have your bonus go entirely in there. So in that case, the entire amount is going to your 401k. You're not actually taxing your bonus, so you're not losing half your bonus. If you think about it this way, if you were to do the opportunity cost of putting all of your paychecks in, so in this case, let's say the limit is 23,000. That is about like, let's give or take, like $2,000 a month. So that's about like 1,000 per paycheck. If you were to do that, and then you get your bonus, you get slapped with you probably get like a huge tax, like I said, and you only get half of that. So that's like $5,000 that you get from a $10,000 bonus. Okay, so if you were to do the other way around, that $10,000 goes straight to your 401k, and so you save all on that big bonus money, and then what you do instead is that you put it on your salary and you reduce that a little bit amount. So yes, you might not get that fun impulsive bonus impulsive money, but you are getting more money throughout the entire year because you are reducing how much money you're actually putting in your 401k from your paycheck. So I hope that makes sense to you, because you do get taxed more on your bonus money. So why don't you just take the tax advantage of putting it entirely into your 401k? That's if you have like 10k. If you have like 20k, you're almost there, okay? And so just to give you full transparency, my bonus is actually around that amount too. So for a lot of people at Google, we end up putting our entire bonus, or at least a part of our bonus, to basically cover the entire contribution limit, and we don't have to contribute at all to 401k for the rest of the year. Maybe towards your after-tax 401k if you want, but basically you're saving all of that bonus money. If you were to calculate how much money you're losing on taxes, you actually lose more money if you do it from your salary and you keep all of your bonus, versus if you did it the other way around, you put your entire bonus in there, you're saving more taxes by just not getting that taxed. Instead, you're getting your salary taxed because salary gets taxed less than if you were to have supplemental income. So that's what I would do. This is the biggest reason why I made this video, is because of the fact that this video is going to come out before the end of the year happens. And if you have a big bonus that's coming and you have a way that you can actually control how much money you can put into your 401k. So for example, at Accenture, I need to double check, but I'm not at Accenture anymore. I don't think you're able to say like the bonus goes here and my salary goes here. But at Google, we do actually have something like that through Vanguard. With Vanguard, it does allow us to say like, okay, I want my salary paychecks to go here, or I want my bonus paychecks to go here. And I can say 100% of my bonus goes here and then my salary goes 0. So I don't actually contribute to my 401k on a day-to-day, and I save more over time. If you think about it this way, let's say $20,000 on a bonus, like I would save about $10,000 on taxes. Of course, I'll still get taxed on my actual income, but like the tax rate of like 50%, well, I'm just making a rounding number, by the way, it doesn't have to be 50%, but I feel like it's 50%. 50% versus how much it is for when I do it my salary, it's like 30%, I think. I'm still saving about 20% doing it just like that. So, and it's easier to just kind of put that amount in there, and I know the predictable amount of money, and I don't have to really calculate how much money I need to put into my 401k. So that's what I would do. So number one, maximize matching for 401k, and if you can, put your entire, if you can put all of your money, not all of your money, maximize your contributions to your 401k. And if you can do this even better, put your entire bonus towards that, so you actually get a bigger paycheck every single time. You may not be able to do like a fun bonus spending money, but I'm telling you now so that way you can financially plan for next year, or you can actually avoid that, because at a certain point, just because of how big the bonuses are here, I need to actually do this before the year to say, like, I'm not contributing to my 401k with my salary, with my actual paychecks. So I have to zero them out. I might actually put some still, like maybe like 5% into my after-tax 401k just to hedge my taxes at least. But when it comes to my actual 401k contribution, at least, I'm using it to my bonus. And there is a way for me to indicate that. So that's what I wanted to share. Then after that, there's like the typical things like maximize HSA. You do have to make sure that you have a health insurance plan that does have an HSA, but sometimes you don't even need one. It could be an FSA as well. So both of them are tax advantage.